Thank God it's Friday. It's Friday, February 4th. We are 1 hour into trading. I'm trying to get an early video out. There's lots of action, a lot of lessons that I can teach you. I am taking away from the meat of my trading day to teach you these lessons. So let's take a look at what's going on. First of all, ATI, the previous pick that I made back on Wednesday, you can see how the stock is continuing to push higher after that strong earnings reaction. Downward sloping trend line, breach to the upside, horizontal support. It was resistance, now it's support. Stock continuing to grind on big volume, long-term horizontal breakout. Love it. Let's get right to the market. Not so good. Things are not looking good. I'm going to paint the overnight picture for you as well because you won't see it on this chart. I want to focus on what's in front of us right now. Well, we had this gap down yesterday. Had very, very compressed trading, which we tend to see that on these big gaps, up or down. Makes the move and then it just kind of sits. Doesn't do a whole lot, but in the afternoon, 1, 2, 3, 4 touches on support. This is where buyers were lined up. So, of course, we're going to see some programs trying to knock them out, trying to trigger those sell stops, and that's exactly what we got. But we didn't come down, take out the low, and then reverse instantly back into the range. No, we didn't do that. That would tell us that this move was only to trigger and flush out those longs and to trigger those sell stops. Instead, we started to get some follow through in here. That's not good. And then we make a new low of the day and we drift lower into the close. Okay, some nervous jitters. Know that the S&P 500 closed below the 100-day moving average. That's not particularly good. But then what happened overnight? Overnight, there is a bearish moo alert. That is something we use to trade the futures. Right now, I would be trading that alert. We're making a new low of the day. I would be short here. In fact, I'm going to put on just a tiny short, just so that we've got a position on. And we're going to go with that. And I am currently short. So just did one contract, nothing big. Anyway, so back to the market. We've got this really nice bounce off of a long-term support level that we've established, and now we've started to break out through some major moving averages. You can see how we cleared the 200-day moving average, no problem. Hey, look at this. This is on Wednesday. We're above the 100-day moving average. Had huge news from Google, AMD, tech stocks rallied. The QQQ closed above the 200-day moving average. Wednesday, everything is looking fantastic. On Thursday evening, we get Facebook. Yes, Facebook's going to take a lot of blame for the sell-off, but it really wasn't it. This big sell-off right here, and I have been mentioning this as well. Yes, I have been bullish, and I am still bullish, but I've also been mentioning that after a big decline like that, we are not going to be off to the races. This is going to be a bottoming process, and we are probably going to establish a higher low double bottom. So that's something that we have to watch for. I'm watching for this 200-day moving average on a longer term basis. I don't really want to get close to that 200-day moving average. I want to find support above the 200-day moving average. So I want to know that buyers are so anxious to get long that they're not even going to wait for the market to come in and test that level. They're going to be buyers here, and then they're going to come in and force a rally today. That would result in a higher low double bottom, and that would give long-term asset managers even more confidence to come in and support the market, and then we can get another leg higher to the 100-day moving average and perhaps even test the 50-day moving average. So didn't quite expect this type of selling to happen so quickly, but it has. So we've got to roll with the punches, see what the day has in store for us. In terms of the price action on the S&P 500, we get this sell-off yesterday and we close on the low of the day. Maybe some nervous jitters, a little bit ahead of Amazon, maybe not. Amazon comes out and all of these losses on the S&P 500 were erased after the close yesterday on that Amazon gangbuster number. But, and I expected this morning when I came in, I thought, oh, well, the markets should be up nicely. It should be up 50 S&P points. And I looked at my screen and went, oh, we reversed everything. And that's exactly what happened. All of those gains were given back overnight. There's about a 70-point round trip that the S&P futures made last night. That's bearish. That tells me that even with all of Amazon's great news, there's still selling pressure. You can see how we're continuing to drift lower right now. So I expect that by the conclusion of this video, I'm going to have some decent profits in my S&P trade. In any event, we're going to take a look at some stocks on both sides. And the point that I want to make is that we came in today, and I'd mentioned to everyone, we have to always put the market into context. What are we expecting on the open today? Well, we've moved 70 points overnight, up and down. What do I expect? I expect lots of two-sided action, lots of long candles like this that reverse both ways, up and down. And it's going to take a while for that price action to settle out. So as far as futures trading, there really is no trade. We should sit back and wait. I'm going to also go into a chart right now. UVXY measures near-term option implied volatility, and you can see how option implied volatility spiked, and now it's been falling back. However, when we start to see increases in option implied volatility, we know that the move lower is legitimate. So let's go into that 5-minute chart, and this is one of the premises behind the trade that we just entered, and look at the UVXY. You can see how persistent this rally is in option implied volatility. So I'm expecting this move to continue to go lower. So in any event, we've got a market that's got some serious nervous jitters ahead of the March. Yes, March. There is no February FOMC meeting. There's a meeting in March. We already know the Fed officials have said we're going to, in all likelihood, hike rates a quarter of a point in March. So this is baked in. Yesterday, there was a Fed official who came out and said, hey, we need to have 3 consecutive rate hikes back to back to back at our next FOMC meeting. So the market reacted to that. I didn't see that as news per se, because most Fed officials are expecting 4 rate hikes this year. We've had inflation on the rise, and there was a component of the jobs report that came out this morning that I think is sparking some of this selling pressure. So the expectations were, we could even have negative job growth this month. We could have a negative number, but that's not what happened. 467,000 new jobs were created during the month of January. Huge number. All right. Hey, everybody. That is great news. People are employed. They are making money. That's good for economic growth. The market should love that news, right? No. Why not? Because that is going to give the Fed even more latitude to hike rates more aggressively. You had a strong economy, you don't need the Fed stepping on the gas pedal. They can start pumping the brakes a little bit. So good news is bad news is the environment that we're in. But there was one component of that jobs report. It's the increase in hourly wages that I think is also very problematic. He had a 0.7% increase in hourly wages. The largest input cost for corporations is wages. So that is very inflationary. That puts even more upward pressure on interest rates. So we're currently seeing a bit of a sell-off, and you can see UVXY continuing to move higher. We're going to take a look at TLT, and this is what bonds are doing. Bonds are selling off hard, and they are through major horizontal support right there at the 141 level approximately, and you can see they are making a new 52-week low. When you have rising interest rates, that puts pressure on the market. In particular, it puts pressure on tech stocks. So need to be very careful in here. I'm still bullish, but I think the market's going to go through some severe nervous jitters for probably the next month until we get that FOMC statement and until they actually hike rates. Do I feel that we're going to take out the low that we established a week ago right here? Probably not. That was at the 420 level. That is a major support level as well. That's what we call a measured move from the high. If you took that number and you figured out the difference, it's about 30 points, and you subtract 30 points from that number and you get down to 420, measured move. So I don't think we're going to get down there. I think that we're going to test this support level. Everybody's going to take a deep breath and the market's going to be able to find support again. So I'm not overly concerned. The thing that you have to keep in mind if you're a longer term investor or swing trader is that we've had some of the biggest market moves higher in a rising interest rate environment, but it's the anticipation of that first Fed rate hike that scares the living heck out of everyone because they're worried that the Fed is going to put the brakes on too quickly and that it's going to stifle economic growth. So after the first couple of rate hikes, everybody takes a deep breath, they take a look at the economic releases and they go, "Ah, oh, good. The economy is not falling apart. Everything's fine." And then actually you start to see the market rally because the market is able to shoulder that bad news. Economic growth continues to accelerate even in a higher interest rate environment. And then you get these nice sustained moves higher. So we're right in that anticipation range right now where everybody's really worried about what the Fed's going to do during the next March meeting. So we're going to continue to see volatility. That's the context. That's what you have to take a look at when you're day trading this and you come in and you see that you've had a 70-point overnight move. You've got to wait for all of this to play out. And now finally, we've got upward sloping trend line, breach to the downside, long red candle. Okay, we're going to challenge the low right there. We've got a bearish 10P cross. We can start considering a short in here. So that's exactly how we're playing it. We're starting to stack red candles, very little retracement. So let's talk about this because this is important. So we get this long red candle. If this were a fake move right here just to shake out longs, you'd see a retracement all the way back up that red candle, but you didn't. We got to about the halfway point and then whap, that candle closed at the lower end of this red candle. So that's a little bit bearish. You would expect maybe there'd be another green candle, try and rally it off of that. But when you get follow through and another long red candle and you take out the low of the day, that is a bearish sign. And so we're continuing to drift lower now. You can see this candle barely retraced into that red candle. They're starting to stack. This open here is below that close, follow through. We're seeing sequential red candles right now. So we've probably got a little bit more downside to go. Let's put up the daily chart and let's figure out how much lower we might go. Well, that 200-day moving average is right there. And you can see versus the SPY, it's at about 443.31. So that gives us about $1.20 from the current level, or about 12 S&P points. Guess where my target's going to be for this trade? It's going to be just above the 200-day moving average in case buyers are aggressive and they don't wait for it to test the 200-day moving average. Am I expecting us to plunge right through it? No. And especially if I see us attack that 200-day moving average with tiny little candles like this that are compressed. When you see tiny little candles like this and you start getting overlapping and mixed candles, that tells you that support is close and that you should be closing down your bearish trades because that move is starting to get exhausted. You take profits, then you wait for that bounce and you look to reload, provided that that bounce is shallow and looking pretty brief before it rolls over. So that's how you trade the S&P futures. Trying to see if I've got an example for you in here. A little bit in here. You can see how we get this compression. We can't really lift off, and then you get a couple nice green candles, and instantly we start gobbling up those two red candles, and then there's your next wave of selling. We never really lifted off very far, and we erase those two immediately within about a 30-minute time span. Even a 20-minute time span is even more ideal, because if you just get these three candles and then red, red, that's all you get, you know that this is so shallow and so brief that that move downward is going to be very, very strong. It's a little information on how to trade the S&P 500 while you're in holding pattern this morning. You can see that not a lot going on here. Mixed green, mixed red candles. What do? Yes, if you're only trading futures, then you have to be patient and you have to wait. But if you're looking at stocks, there were a ton of great stocks this morning. One that I really like, and it might be my stock pick of the day, was Amazon. Amazon was all the way down here yesterday. There's the earnings rally. I love that reaction. Let's take a look at Amazon. Look at how well Amazon is holding its gains after that market sell-off. It's up almost near the high of the day. Market down, down, down. Here we are, 90 minutes into the open. I'm telling you, Amazon wants to go higher. Just need market support. Once we have market support, see ya later. So I believe that Amazon is going to be a great stock pick today. I'm watching for that market support. And let's go through the list and see if we can find a couple others. I think Amazon's going to be my pick of the day. BLL, also really nice. I highlighted this in the chat room earlier. Look at that relative strength. That is a post-earnings play. You can see earnings after the close. It's got room to the 200-day moving average. I love it. Snap. Posted this in the chat room right on the open. You can see, let's go into the 5-minute chart. That is a nasty earnings reaction. And there you can see how it's actually been able to hold the low of the day. I don't like buying down in here on these big gaps down. So this would not be my pick of the day here. Actually, it's got earnings after the close. Oh, okay, I'm sorry. There's the earnings reaction. After the close yesterday were earnings, and there's the reaction. So I'm sorry, I had little off on my spacing here. But yeah, so it is actually filling in that gap, and it's also above that resistance level. So Snap actually looks pretty decent. I still don't like trading stocks in the lower right-hand corner. All of the energy stocks. So right out of the gate, you had some really nice looking stocks in the energy sector where they were stacking these candles. I think energy stocks are going to perform well. You've got a commodity type stocks, you can expect moves up and moves down. Gold stocks, energy stocks, basic material stocks, they trade like commodities. You get the move up, you get these stacked candles, you better be taking profits in here. Now you get your dip, compress, compress, compress. This is where you'd be looking to buy and reload on that type of strength. So I'm going to close down my futures trade right now. I've got a little bit of a profit in it. I don't necessarily want to be doing this while I'm recording the video, so I'm going to close her down. I do like that Amazon trade, though. That is one that I would be anxious. So I think I made half a point on that S&P trade. Didn't get the follow through. Let's talk a little bit about that, because I was in a futures trade this morning. I like this downward sloping trend line here. I like this bullish 10P cross. I bought futures right in this level right here. We were starting to break out. I like that. Actually, it might have been right in here. And so I held on to it, and I saw this bar reverse, and we just weren't going anywhere. I thought, you know what? I'm not going to park on this futures position because we've had extreme overnight volatility. I wanted to see long green candle, long green candle. I wanted, and we had preserved half of this long green candle. So we get this big rally. We come down, we check the halfway point. Okay, this all looks pretty good. Starting to build in here. Got the 10P cross. All is good. Getting through this downward sloping trend line. Everything's good in here. So I take the trade, but I'm expecting those long green candles. When I don't get them, I'm already 5 minutes in. I'm not liking it because I wanted to see that lift off. So I exited. I took a scratch in here. About 3 or 4 minutes later, I was very, very happy that I had done that long red candle. So for my futures trading, when I'm in a position, every minute that I'm in that position where it is not going my way. I am one step closer to a 50-50 proposition. I don't want to be in a 50-50 proposition. I want to be in a 75% winning situation, 25% losing situation. I need to always have the odds in my favor. So if I exit here and then I get the long green candles, that's okay. I missed the upside, but I'll be able to evaluate that breakout and now I'll have even more confidence that that move actually was legitimate and that it is unfolding. And then I can choose to join that trade. But what I avoid is that downside risk, that what I saw here and didn't play out as I expected all of a sudden turns against me. I don't want that type of downside. When you're trading individual stocks like I've just shown you, Amazon for instance, you have more latitude because you can monitor this relative strength as the market is pulling back and pulling back. If you're trading futures, you don't have that cushion because you're trading futures. If I'm long here and the market goes down, I'm going to lose money. If I'm long Amazon here and the market goes down, I'm not going to lose money. I'll have time to evaluate this. And if I need to bail on the position, I can, but I'm not going to have my head handed to me. So I want to make sure get that information out to you. That is the edge that we trade. And what does this tell us? Why does this even exist? Normally, on a gigantic move like this, you are going to have profit takers in Amazon. They are going to come in and see this as an opportunity to sell because Amazon has been sold recently. So if this were all just a fluffy move, and I could show you a lot of other stocks that have given back their opening gains, if this were all fluff, you'd see whack, 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 all the way down, especially with the market moving lower. But when the market's moving lower and the stock is holding all of these gains, the natural tendency is to sell it. So you've got some profit takers in there, whap, 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 but they're not able to drive the stock price down. Why? Because there are buyers. The institutions have shown their hand. They are buying aggressively. That's what's supporting the stock. As soon as the market finds support here, guess what Amazon's going to do? Zoom! See ya later. That's how we play the game. I think I'm going to conclude my video with that note right there. It's Friday. We're going to be looking for some option lottery trades late in the day. Maybe I'll do one of those videos in the next week or so. Who knows? Maybe I'll be motivated to even do one today if I get a nice setup. The deal with option lottery trades is that you have to be perfect because we are trading options that will expire in an hour. So perfection is required. We've got to have the perfect market backdrop. When we have that perfect backdrop, we're looking to buy options for pennies and sell them for quarters. So big potential gain, very low risk. It's the probability side of that equation that we have to work on because these are wasting assets. Every second that ticks by, those option premiums are collapsing. So we've got to be perfect on our entry, got to have that market tailwind. If we can line that up, boy, those are some fun trades. It's a great way to finish the week. Have a great weekend, everyone. We'll see you Monday. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.